Darren. Thanks so much for joining me today.
Yeah, pleasure to be here, Kiah.
Well, I am so excited to be talking with you a little bit more to help understand the technology and the infrastructure that goes into, making commercial payments and treasury management a really exciting value proposition for banks, and thinking about some of the challenges that this business line presents for banks, but also the opportunities. However, I was so thrilled to find out that you used to design space shuttles and now you work on infrastructure for banks, or the infrastructure layer. So, my first question for you today is, what do space shuttles have to do with financial infrastructure, and which one is harder?
So first, what I'd like to say is, just to clear the air, I did not design the space shuttles. I worked on them. I had about the coolest job you could have as a 20-something coming out of college.
Okay.
And basically any scientific experiment that flew on the shuttle, our team would put it together, would test it, would train the astronauts. And then we were the second to last people on board the shuttle before it launched, putting in time critical science. And we were the second people after it landed, second vehicle in the convoy. The first group that take the astronauts out would go and pull the time critical science out of it to get to the experimenter. So it was, as a 20-something crawling around spaceships was pretty cool. And then I made the very natural transition from space shuttle to payments. And you may say, like, what do they have to do with each other? Long story short, and I know this is going to sound kind of weird to a lot of people, but so like, why did you leave NASA? And I was like, well, I got bored. And really what it came down to was the same thing over and over and over. Yeah, the experiments were different, the shuttles were different, the astronauts were different, and you get to meet people and do cool things, but
Hmm.
it was kind of the same thing over and over again. I've been in payments for 25 years. I've never been bored.
Oh my God.
So, the space shuttle, it takes, bearing up by mission, 9 months, 12 months for a given shuttle to make the rounds and get ready to launch. 250,000 parts. At the Space Center, at Kennedy Space Center where I worked, we had 17,000 people that were making all that happen.
Yeah.
And it has nothing in complexity on payments. Payments is so
Is
infinitely
that a
more
good or a
complex.
bad thing? Does that say good things about space and bad things about payments?
I think it's job security, but it's no. I mean, it's a, it's kind of bad, right? I mean, it shows you the state of where we've grown up, and the issue with the payments and the complexity in it, the technology is one thing, right? That's obviously one aspect, but the technology is actually, and I think we could talk about this in various aspects as we go through. The technology is one thing that's usually not the limiting factor. The limiting factor are all the compliance, risk, regulatory. So you
Sure.
have all these different facets, right, that have to come into play, and it's exceedingly. Oh, and by the way, you have acquiring payments and you have issuing
Yeah.
payments and you have all right.
And yeah, when
So
we say
like,
payments, we mean all of the payments, but there's many things within that word, right?
yeah, and very few people know lots of stuff. Like very few people. I mean, no one knows everything.
Sure.
Stipulate for the record. And there are very few people who know, like, the majority of the stuff. So it becomes very, very difficult to bring all this stuff together to make ecosystems and products and everything work
Yeah.
because of the complexities that are involved in it.
Yeah. And I feel like your background with NASA has taken on, I think some extra novelty given everyone's interest in Artemis. That feels so, tangible. We all kind of got to see what the inside of a space shuttle looks like and recently and be like, wow, space is so cool. And look at the pictures they brought back. So it's very zeitgeisty, but I totally, that's also, I can kind of see how though everything is like a little bit different, but it's kind of the same now. That's like me being a journalist where I kind of do the same tasks, but on a different thing. And so you better love the mental novelty that can come with it. And I'm sure payments is kind of like that too.
Yeah, well, and I'll talk about, one of the similarities, by the way, that exists between payments and the space program. So in the space program, you have levels of criticality, severity of things that can go wrong. You have the same thing in payments, by the way, but in the space world, you have loss of data, you have loss of mission, you have loss of life, and those are the sort of the escalating levels of severity. And the higher you go, the more levels of redundancy you need to have to make sure everything's covered and you're gonna be able to get out the other side, right? Um,
Yeah.
and that was, by the way, on full display during the during Apollo 13, and
Yeah.
obviously the movie. If for anybody who hasn't seen it, I can't imagine no one's seen it. If there's anybody listening who hasn't seen it, but if you haven't, it's like just such a great movie that exhibits the reason why you have to have the redundancy.
Hmm.
Those Now we're not dealing with loss of life in payments, but
Thankfully.
we are dealing with kind of one level, just barely one level down, which is you can have companies that go out of business because a fraud event happens. Compliant. I mean, look at what happened with Synapse and Evolve, right? This was a criticality 3-level event. I mean, this was like way up there, and it's one of those scenarios where if you don't have the backstops, you don't have the redundancy.
Hmm.
And I put those same things in the products I work on, the products I design. We put in that same type of philosophy that we had at NASA, which is, again, do you lose some data? Okay, not good, but
Yeah.
not horribly critical. So
Yeah.
that's one level of redundancy. Do you lose a client because something really bad happened and
Hmm.
now they're like, hey, sorry, you guys were out. Do you lose your company? And again, Synapse, what happened there was a company loss and pretty darn close to a bank loss at the
Yeah.
same time.
Yeah.
So there's the criticality levels. They're one level down. People
Yeah.
aren't dying because there was a payments breach or something, but at least we don't think so. But the other side of it is there are companies dying, and along with that go a lot of people and a lot of livelihoods and everything that goes along with it.
Yeah. And, thinking about payments criticality, there's a different example that has happened this year, which is like a fintech built that will do rent payments. And I'm like a customer and I had a rent payment fail. It like disappeared for 5 days and it was my rent and it was due to my roommate who never received it. I live with this person. Like I could have just walked down and handed him a check. But in that moment, I was really struck by the criticality of this payment. And I'm in a situation when I could give him a second payment and I was fortunate enough to get my payment refunded eventually after a period of days. But for other people, missing a rent payment and not being able to make the second one is like you could like be evicted, right? And that's through no fault of the landlord or the renter, but there is a like a severe criticality that I hadn't quite appreciated because I am just actually used to all my payments going through and never thinking about them until the one really big payment I make a month didn't go through. So
by the way, you're not unique by any stretch. I mean, I'll give you another example. So I worked before co-founding Qolo. I was working with an EWA company, Earned Wage Access, which is, hey, you start working today, you don't get paid for 19 days. They give access to the money you've earned but haven't been paid for yet.
Sure.
And there was a customer who we had a card product and they had put a bunch of money on the card and they pulled like $3,200 off the card to go send to they'd open a bank account. It never arrived. And it was one of these weird scenarios where it was just everything was in limbo and no one knew where this payment went. And it wasn't Payactive's fault. It was the company saying it was Payactive. It wasn't their fault. It just happened, right?
Yeah.
It was something in the middle of the payment system in the ACH system where there was a misformed field and it just got lost. Now we made the customer whole.
Yeah.
But for like a few days while we're trying to figure out what's going on, this customer's freaking out because that was essentially their life savings.
Yeah.
And we're in a business where we were as part of Payactive in a business where you're making lives easier for people. You can't have a scenario where you just made it harder, right?
Yeah.
So we made we forwarded the money. Like once we realized it wasn't them playing games.
Yeah, they're not trying to rip you off.
That's right. We forwarded the money and made them whole, but it took us months.
Oh, awful.
Months to figure out what had happened, and it was getting both banks involved and getting Nacha involved and tracing the payment, and we eventually found it. But it was these are kind of things that are nightmare scenarios, and you talk about it. You get a fintech who maybe not be 100% wonderfully versed in how payments work because of the complexities that we talked about, and these kind of things can happen.
Well, now that we have established the criticality of, what we're talking about today, tell me about Qolo and how Qolo works with banks.
Yeah. So fundamentally what Qolo is we are a 3-legged platform.
Okay.
We do payments and we do this at the infrastructure level. So we directly integrate with banks for the payments. We're not sitting on top of some other fintech somewhere else. We're as close to the rails as you can get.
Okay.
We do card issuing processing. Once again, We are the issuing processor. We don't sit on top of somebody else who's the issuing processor. And then the last thing that underpins all of this is a dual entry, bank grade ledger. So it's every debit has a corresponding credit somewhere. Every credit has a corresponding debit. We're able to orchestrate payments through all this stuff and reconcile all of these things throughout, right? So by bringing those three together, we take away what we used to call the spider web of fintech, which is banks would come in and do point solutions and say I can make this happen. It works pretty well short term, but long term, you got to manage it. You got to maintain it. You got to have
Yeah.
engineers that know this stuff. And then what happens when you upgrade your core? What happens when you do these other things later? You run into a scenario where you've got these outlying point solutions that have to be
Sure.
accounted for, and that carries a cost. So what we do is we bring this technology of having it all together in one platform to banks and fintechs, and we have two very distinct lines of business, and offer modern products to banks and offer bank-like products to fintechs.
I love and I think about how important companies like yours are in connecting these different types of companies that, for whatever reason, it's just not maybe a good use of time or money to build the connections themselves, and to instead have this like other layer, this infrastructure layer, to facilitate those connections. And obviously, you guys get to dwell in the most complex part and address that. And then, for me, an end user of a bank sending money, I love not thinking about any of it. And I love the money just showing up there at the speed that it moves in my head, or the speed that I want it to kind of leave my bank account. So, in your work, kind of on both sides, that bank fintech, and then to think a little bit about how banks can use Qolo for some of the payment needs that commercial customers have. What kind of challenges do your customers tell you they have? And then, especially like if we think about not just payments, but like kind of product or service or capability problems or gaps that they have, and then how do you hear and receive them? Like, how do you understand what your clients want to do and what you can help them do?
A lot to unpack, and it's a great question. So on the banking side specifically, the vast majority of the footprint of banks, if you talk just customer footprint throughout the United States, we'll leave the international out of it for now. But the vast majority of customer footprint of banks, so it's all the big banks, it's all the super regionals, et cetera, national
Yeah.
super regionals. They're all working off of core technology. Their banking cores are probably 30 plus years old.
Right.
Uh,
Right.
and and so they were built in an era where you needed to have an account, you needed to accept ACHs in, fast forward a little bit into that 30 years and you're doing debit cards.
Hmm.
So you had to do some pretty simple things. Those are all legacy products now,
Yeah.
right?
Yeah.
And you've got these new features and functions that are coming in. You have companies like Ramp and Brex on the expense side. You have companies on that are Kyriba, et cetera, on the treasury management side. So you have these different players that are coming in, and Kyriba is a little bit different. It works with banks instead of against them. But the Ramps and the Brexes of them are working against the banks, right? They're competitors now of the banking ecosystem, and the banks are losing sizable clients to them. Banks that were doing all their expense stuff and providing purchasing cards and those kind of things
Mm-hmm.
are losing those customers to the Ramps, Brex, Slash, et cetera of the world.
Yeah.
These guys that have built a really great user experience, because banks generally are good technologists and that kind of stuff. Just face it, they're not wonderful at user experience. And whereas like Ramp is awesome at user experience, right? And that draws in a certain type of clientele when you can manage all your money, when you can manage all your expense cards for all your employees in one place, and you don't have all this stuff,
Yeah.
machinations you have to deal with.
Yeah.
It's easy to see why customers leave, right? So one of the biggest pain points they're seeing is they've got fun. Oh, and by the way, Ramp is far more agile than a bank is in being able to get things done.
Mm-hmm.
So you'll see the scenarios where customers are exiting the bank because their lives are so much easier. They get the functionality that they need
Yeah.
And this is just one small segment of the business, on the purchasing cards, et cetera, and bill payments. But they get all the functionality they need out of a provider. Why do I need the bank for anything other than holding the majority of my money?
Right. Well, and I think the other thing too is, even some banks might think like, well, why do I need to offer the functionality or the capabilities if I have the deposits? And it's like, oh, I would say that if you have any indication that your customer is using any of these capabilities, those deposits may be less sticky or less relationship based than you might think. And that maybe there might be, you could expect a migration. Like that's a yellow flag that the relationship is, the banking relationship might change. And I'm kind of fascinated by, I think as, a consumer, I used to go to the farmer's market and you'd have to like stop at the bank and get a bunch of 20s to go to the farmer's market because that was how you could make these small purchases. And then, there was like, I don't know, 2 years where everyone got a terminal, right? Like a dongle, like, the Venmo. And like, I was just thinking about how, now I get to not carry cash in a lot of these situations. I don't have to stop at the bank before I go to the farmer's market. Well, I know that the providers that provide these like dongles they also might provide some software that help you track how many sales you made at the farmer's market today. And then those cash flow receipts, oh, well, do you want to just we can deposit your proceeds from the sale into this account a couple days earlier than you might have gotten it into your bank account. And to think that like that is so like that feels like a really natural product roadmap. Like, and so if you are a bank and you know that your customer is using maybe that type of payment acceptance, you might also ask yourself, what kind of other services does this dongle provider offer my customer? And at a certain point, will the deposits stop hitting the account? Not just like leave the account. They might the account just might not grow.
Yeah, so that's it. I mean, what I'll talk about is going back to, the banking side versus
Yeah.
the fintech side, and the dongle provider versus cash or the ATM, right?
Yeah.
Is what we're finding now is that there are a lot of progressive banks, and we announced Key Bank launched a couple of years ago, and Huntington Bank launched last year
Okay.
for our virtual account management product. These are a couple banks that see this.
Yeah.
They saw this, I think, earlier than most other banks did,
Sure.
and are putting out products based on our system to enable their customers to have advanced functionality. And also, by the way, you get into fintech point solutions, no different than they have bank point solutions. So they might be using Ramp over here, and
Sure.
they're using somebody else over here. Well, again, the banks can consolidate that. We just
Yes.
announced earlier, well, not earlier this month, late in April, less than a month ago, we announced the Key Bank virtual card, the Key VC
Yes.
program that we launched for them. So they're rolling out that competitor, and now you can say you don't need to go and start worry about moving your money
Yeah.
and doing more treasury management and that type of stuff. You can just do everything through the bank. Now what we're seeing is other banks are going, I can't miss out on this.
Yeah.
Because now it's not a matter of, because it's a bigger step, it's a bigger leap for a corporate to say, yeah, I'm going to leave my banking relationship that I've had for however many years, and I'm going to go move a chunk of my money over to Brex
Mm-hmm.
and have a bunch of my expense going through that. That's a bigger leap than saying, hey, I can get everything instead of using this other bank, I can use Key Bank and get everything I need from Key Bank. That's a lot easier of a move. I'll change my banking relationship.
Yeah. Yeah.
And give me a better rate, Key, and give me better things, and I'll move over. And then it's a no-brainer. I'm getting a better rate. Whereas if you're just getting a little bit of that, is
Yeah.
the juice worth the squeeze to get out there? And the answer, maybe. I've got relationships. I don't want to screw them up. But if you're getting all the other stuff on top of it, then you end up winning out. And that's where, we're seeing a lot of other, the more kind of tech-forward, progressive
Mm-hmm.
thinking in this regard, banks coming to us to do not just what we've done there, but also, steps beyond that are pretty
Right.
darn cool.
Yeah. I mean, you got to start somewhere. And I think those are really great places to start. But kind of once you get the relationship going, it's, if you have this like flexible infrastructure layer, you have a lot more options for whatever you think you might use it for. Um, before we move on into like banks and the implementation and some of the challenges they have with technology, I wanted to stay with commercial clients for a hot second. Um, I have heard that, some of these commercial clients, small business owners, they will sometimes build their own like treasury dashboard using spreadsheets to try to get like a consolidated view. So like, and that's something that like I can think about because I use like a budgeting app that like, because I'm like a psycho and I have 16 credit cards, like I need to see where all the money goes. And so I can understand like actually how powerful that is to have that consolidated viewpoint that connects all my accounts and I can see the fun, like I can track the money. My question for you is it a good thing or a bad thing for a bank if their customer finds themselves needing to do this in order to get a handle on their finances? And why or why not?
Yeah, it's a horrible thing. I mean, because listen, I've through in various facets of my career, I've lived through the spreadsheet hell. And by the way, not just for financial stuff, but for
NASA.
tracking work and and other things. Like it's a mess.
Yeah.
It's not easy, and you make mistakes, and you can't afford to make mistakes. Take an example. So you got 16 cars. Take an example of someone who's a franchise owner, and they've got,
Okay.
30 Pizza Hut restaurants, and they've got 50 Burger Kings, and whatever. So they got, say they got 100, 150 restaurants under different brands, et cetera. Like, how are you going to manage that across 150 different locations?
Right.
Not very easy, right? And what if you want to give expense cards to the managers of those locations and track all your expenses? Well, when you're doing it on spreadsheets, you put this extra hop in.
Sure.
And that hop, by the way, is delayed.
Right.
So it's not right now data. It's data that's probably from yesterday, right? So you've got this extra hop. You've got data that you've got to now massage and you're messing around with. And yeah, people are going to be pretty good at Excel and be able to do this, but there's always the opportunity for error. Wouldn't you rather be able to go into an interface and say, here's my total cash position across all my restaurants. Let me go down to Pizza Hut. Here's my total cash position there. Let me go into location number 73 in Paducah, Kentucky.
Yeah.
And here's all this other stuff.
Right.
Like dip. Here's all these things.
Right.
You've got all of this data and it's real time. This is the other aspect of it is you're getting real time data in a world where everything is usually a day behind. That gives you a significant advantage to understand what your cash position is at any given point in that hierarchy, and being able to manage your restaurants more effectively. And that's just one use case out of a myriad of these. We're having that ability for real time visibility. In some cases, real-time money movement. Not everything's real-time, obviously, ACH and that kind of stuff isn't. But being able to know that when I've sent an ACH out, what's the impact going to be? When's it going to go? When's my cash position going to change? All of that stuff is in your face instead of having to. By the way, because those spreadsheets take time and people.
Totally.
Right. So being able to have all that at your fingertips is exceedingly valuable.
Yeah, and I just think that if I was a bank listening to this in 2026, I might go to like my CNI team, my small business team, and be like, hey, have we asked our customers, what are you using to get a full view of your finances for your business or for all of your businesses? And if the answer is a spreadsheet, that's not like, that should be, again, that yellow flag for us that our customers need a product that we're not able to provide them because we're not giving them that visibility. And then the question is what problems does that spreadsheet create for them? And then how do we find the ability to offer something that would replace this spreadsheet with something that's better and more accurate and more real time,
No, that's exactly it. I mean, you hit on all the key pain points that are associated, and it's not just spreadsheets. It's even utilizing it in third party
the integrations,
software, right? Because you can bring in somebody else that'll manage all this stuff, and they're pretty good at it. What they're lacking is the real time visibility and the real time being able to initiate payments, see when a payment arrived in real time, right? Getting that notification, once again, I'm going to send out an ACH. I'm going to debit the account, and the ACH I know is going to go, but you can see what your cash position is going to be after you send that out. So you know how much is left to spend, right?
Yeah.
Those are the kind of things where having the real-time visibility into that is absolutely critical it's not just small businesses,
Right.
it's across the board, right?
Right.
Being able to understand that.
Yeah, like tell me who doesn't need full visibility in their money. You know what I mean? Like, and also, and I kind of just like, it kind of sucks to say that some people get it and some people don't. Especially like in 2026, right? Like, but anyways, so I do want to talk about, banks and their tech stack. I think this problem, we've been talking outside of the banks, and now let's go inside. This kind of comes up a lot, which is banks would rather do anything than replace their core. And I feel like sometimes they like can't hear or engage in these conversations because their brain immediately jumps to replacing their core. So I totally get that. So then what we've kind of also seen in the last 20 years is they go to the app store, and then they buy like a specialized tool from different vendors, and then they stitch them all together into kind of like a Frankenstein's monster of different apps and capabilities from different vendors. And there's like a ton of issues. That's expensive. It takes up forever. Not everything plays nice with each other. And like there's a lot of due diligence involved. So I listed off why, like other reasons why this is bad. But can you tell me why this approach, which kind of makes sense or feels like the thing you would do instead of replacing your core, is like not a great way today to be adding products and capabilities? Like, why should I stop making a Frankenstein's monster?
Well, you listed off all the reasons. The other piece of it is, by the way, when that payment goes missing, and we talked about what
Oh yeah,
happened.
yes, a
What
callback. Yes, go.
wasn't our fault that the payment went missing. When my previous employer, it's something that happened inside the banking system. And guess what was happening? It's a more macro level example,
Mhm.
but it's exactly the same example. Guess what was happening between the two banks? It's your fault. No, it's your fault. No, it's your fault. No, it's your fault. And the customer and us are in the middle trying to figure it out. The other
Right.
thing that happens is when you stitch all these things together. Um, Listen, banks are really good, and what we've found is the more progressive banks, the banks we're working with, the ones we've
Yeah.
talked about, have really good tech teams.
Sure.
So they're very solid on technology. They're forced to use these legacy tools, and all you're doing is laying more legacy tools on top of more legacy tools. And Frankenstein's monster is a great example. We used to call it the spider web of fintech because
Okay.
you got to have all these strands going out and touching all these different things. And again, something goes wrong, and everybody's pointing fingers. So
Right.
it's a good short term. I talked about this a little bit earlier. It looks like it's a good short term way because guess what? I don't have to go through all this stuff with compliance. I don't have to go through all this other stuff, with risk, and I can bring these in together, and each one has their own, sort of footprints in those areas, and I'm covered, and it's easier. It's not. Because you're stuck maintaining that over time, and that's where
Yeah.
the problems come in. And then the other piece of it is the visibility. Once again, getting down into the visibility.
Okay.
You very aptly said it. They don't play nice in a sandbox together, right? They just won't. It's always going to be somebody else's fault. It's always somebody else's
Yeah.
problem to deal with. So that's where the problems come in. Having that one integrated system makes all the difference. And what we do, our philosophy is we don't replace the core, because you said it, replacing the core. No one wants to replace the core. That's why they're sitting on
That's why they do
30-year-old
this other
technology,
thing. Yeah.
right? And the reason is, we had this conversation with one of our banks, and we were like, so like, how much is it? Is it like a 2 or 3 year project, and $5 million? He goes, no, multiply those by 5 to 10.
Yeah.
He said it's a
Wow.
10 to 15
Wow.
year project. This is
Yeah.
a sizable bank, right? 10 to 15 year project, tens of millions of dollars. And that doesn't include all the churn that it causes within the organization. And then all the risk. Doing a core conversion is not without its risk. And talk about things going missing and stuff happening. And we've done a lot of card conversions in our past, and
Okay.
it's messy,
Yeah.
right? It's messy. It's never clean. So there's a whole host of reasons, and this was our core design thesis. We don't want to. There was a few things that are all along the same vein. We're not going to, because back when we started, by the way, everyone's like, we're going to come up with a new payment rail. Okay, good luck. We're going to embrace the payment rails that exist, and
Sure.
we will build our system so that it's easy to incorporate new payment rails that come in. That
Okay.
was number one.
Yeah.
Don't try to work around wires. Don't try to work around checks, because there's still a huge portion of money that moves via check.
Unfortunately. Yep.
So yeah, really unfortunately, you're supposed to be dead 10 years ago. That didn't work out so well. So, there's embrace these things.
Hmm.
Know that they're there, so that when you go into somebody who says, well, I can't do this without having a check, you've got a solution. So embrace that. And the same thing applied to the course. We're never going to replace the course. That is an absolute fool's errand. If anybody who today was to come in and say, I'm going to build a new banking core and I'm going to replace all the cores, again, good luck. I'm not going to introduce you to any of our investor friends. Like, just
Yeah.
not going to happen.
Right.
Because again, the cost, risk, everything is just so massive to the bank. So what
Right.
we built, our entire strategy was to figure out how we can overlay the core and still provide this functionality. So instead of spending, 10 years, 15
Mhm.
years to go
Mhm.
through this massive process to do it for a large bank, you can do it in 9 months.
Yeah. Yeah.
You can do it using your existing account system. We, again, overlay their existing account system, and you can keep your existing compliance and processes in place. You can keep your existing risk process, your existing ops processes in
Right.
place. So we don't disrupt all that stuff. Yes, there are changes,
Yeah.
but
Yeah.
still fundamentally flows through the same rails and the same mechanisms that they're using today.
Yeah, and I'm not a technologist. I just play one on TV. I like to have to, sometimes I have to think about, when people like you are describing these situations. I think about, the core does something. Like we all have a core. All the banks have a core for a reason, and it provides a very important thing, and it's good at that thing. But it's not good at everything else, and it really hasn't kept up with the pace of technology. So instead of, like, again, gutting that core, is there a way that, again, flexible infrastructure layers can do what the core is bad at without needing to fully, gut or replicate or copy what the core is good at? And and then kind of address one of the biggest criticisms or the untenable aspects of banking, which is, like, a lot of cores can't keep up with technology today. So is there a different thing that can keep up with technology that the bank can use as, like, I don't want to say a substitute, but instead of the core, right? Or instead of the Frankenstein monster fintech web.
Yeah, and the answer is yes, and that's exactly what we've done.
Yeah.
Right? That's
Yeah.
exactly was our design thesis. And by the way, that core design thesis hasn't changed in 6 years since we founded the company. So we've designed that, and that's again because we saw all the problems. We
Right.
knew what all the problems were, and we knew what all the headwinds were going to be. If there's one department in a bank that holds the trump card, who, which one is it?
Um, I mean, ki- I guess for this conversation, I would say IT, but maybe you let credit
Compliance.
compliance. Oh,
It's
I see what you're saying.
compliance.
Okay.
If you
How
because
dare you put me on the spot like that?
whatever sorry what every bank what every bank is worried essless about
Yeah.
is that the auditors are going to come in, that the FDIC is
Sure.
going to come in, and they're going to say, we're going to shut you down because you're doing this wrong.
Hmm.
So that is the one. That risk is really important.
Yeah.
IT is really important. Ops is really important. All these things are really important, but compliance holds the cards,
Yeah.
right? And you can't do anything to upset that. So when you come in with a solution that does upset that, they're going to be putting their hands up. By the way, for very good reason. They'll be
Yeah.
putting their hands up and saying, stop.
Yeah.
By the way, risk will do the same. Ops will do the same. You can't just come in and create with a solution and create all this churn. It's going to be problematic for us. So once again, our core thesis was come in and embrace all that.
Yeah. Yeah.
And figure out ways that and we have done that and figured out the way to centralize all this stuff through the existing mechanisms that they've got and not have to recreate.
Right.
That is the key element. I mean, we've had, with one of the banks we launched, we were ready to go in 9 months. They didn't launch for another 3. Why didn't they launch? Because it didn't involve the compliance teams and the risk teams and their ops teams early enough. And so they kept having all these questions and different things. And again, that's what can happen. Now imagine if you're trying to bring in a whole separate solution that doesn't use the existing pathways. Now you got to say,
Yeah.
oh, we know you're driving a car today to work. We want you to drive a motorcycle instead. Not so wonderful, right?
Right.
That you get a lot of pushback. And so that involving those, and then the other side of that equation, by the way, is okay, you've got this, now what?
Right.
Okay, you got this great thing. Are you able to get out to your customers and let them know what you can do for them? So that's another piece. The recommendations we make every time we go into a bank first time.
Yeah.
Involve your compliance teams, your risk teams, your op teams, and your GTM, your go-to-market teams.
Yeah.
Involve those early so that they understand it. So you're not sitting here for 6 months after you
Mhm.
launch trying to get your sales teams, up to snuff on what to sell and how to sell it.
So you mentioned an earned wage access issue, and we've mentioned checks, and we've mentioned ACH, and we've mentioned wires. Payments are getting faster. I would love if checks died tomorrow, but adding to this are real time payments and FedNow, instantaneous payments. How does the speed of payments create challenges for banks that are trying to enable this capability for clients? And are there like breakdown points or blind spots that need to be addressed that because the payment of the irrevocability of the payment?
A great question, and this varies bank to bank, obviously. So not I'm gonna give some pat answers, but they
Yeah.
doesn't apply necessarily to every bank. But fundamentally, if you think again, when all these cores were built 30 plus years ago, right? Banking was a 24-hour cycle.
Okay.
So when you send an ACH, it settles tomorrow.
Yes.
Best case, it settles tomorrow. Sometimes it can be longer. Even when move fast forward a little bit and you're using cards, when you make a purchase on a card, that settles tomorrow,
Yes.
right? So everything was a tomorrow type of scenario because of the mechanisms that were involved. Now you got these, RTP, FedNow, et cetera, and then you've turned into these settle today. They
Yeah.
don't just settle today; they settle immediately, like
Yeah.
within seconds, right? These things are settling. So all these mechanisms that were put in place around a 24-hour cycle,
Hmm.
again, all the ancillary things, the compliance and risk and fraud and blah blah blah, all that stuff has to now be rejiggered to be a real time thing, and the core, which is again fundamentally a 24-hour system, is now having to act in real time,
Yeah.
and so you get scenarios where I'm going to post the transaction to the account immediately. Memo posted is what it's called. So I'm going to memo post the transaction that you've got access to the money, but
Yeah.
the money's not actually in the account. The
Right.
money's
Right.
sitting in a holding account somewhere else at the bank, settlement account somewhere else at the bank, and then they move it in a nightly process. So if you go and get an actual balance at any given point during the day, it's not going to be accurate.
Yeah. I do my little reconciliations every day. I can see when the money moves.
Yeah, exactly. I mean, and so are you getting it? You get the memo post, but it takes effort to
Yep.
now figure out
Yep.
how all this stuff is going to settle out. By the way, when we do our automated reconciliation, that's one of the most difficult things to do. You'd think it'd be easy. Hey, this is how much money's in the virtual accounts. This is how much money's in the parent account. The
Hmm.
two should match. It should be super easy, right? It ain't easy. It is not easy because you have to pick a time when all the processes at the bank are essentially quiet. Usually it's in the middle of the night, right? So again, we get back to 24-hour stuff. And you can work backwards from memo posting and other things and do that. And we'll do that as well. But it becomes, and it differs bank to bank because they all do things a little bit differently. And that's what's interesting about, sort of the banking ecosystem generally.
Yeah. So a lot of our audience are community and regional banks. And I know that, you might work with some of the largest super regionals in the country, but, and they have great tech teams. But not every bank is fortunate enough to be in that position. What does the path forward for these banks look like if they want to kind of keep up with the pace of technology change, keep up with some of the expectations of their commercial clients? They know they live every day some of the problems that you and I have been discussing. What kind of advice do you have for them?
Yeah, well, by the way, more than just living it day to day is they're losing. I mean, listen, why do people go to community banks? Because of the personal service.
Sure.
I
Yeah.
know my banker. I
Yeah.
can sit down and have a meeting with the banker face to face and say, if you want my business, you got to do this for me, and they have a good conversation around it. Um, but then what'll happen is those businesses that are small, when they go fast forward 15 years,
Yeah.
and now they get too big for the community bank, and they need exactly what it is. They need the advanced functionality that some of the other banks have, and they'll exit. And
Yeah.
this is a problem for community banks. But it's also the issue on, and there's one of our things is we're targeting the top 100 banks. That's our target. We have not forgotten about, and we have come up with solutions for the community banks. The
Sure.
problem is, if to go into an individual community bank with the same vigor that we go into a key bank with,
Yeah.
It's like you get to a point where it doesn't make financial sense to go do that.
Yeah.
So naturally, what has to happen is you have to have aggregation points to be able to get into those. And we've come up with a couple different solutions. We're still in the super early stages of this, but a couple different solutions. Do you partner with a core provider?
Yeah. Right.
Right? That provides stuff to a bunch of community banks, and now you reach out to thousands of banks instead of having to go one by one. That makes a lot more sense.
Mm-hmm.
Also, do you do a correspondent banking thing with one of the banks that we've got so you can take advantage of the rails, and then all you have to solve for is moving money?
Right.
Yep, that's another
Yeah.
way to do it. So moving bulk money, I should say, versus the individual transaction. So there's a number of different ways to solve it. It ain't easy. It's not an easy problem to solve it,
Yeah.
but we're working at figuring that one out.
Yeah. And, community banks are in such a tough spot from a technology perspective. And, I always say that like there's about 3,800 banks, 4,000 banks. And that sounds like a lot, but there's never been fewer banks in the country. And so we're all kind of like dealing with what are the ramifications of a shrinking banking industry. But as the industry consolidates, it will also like the banks will get bigger over time. Like that's the other thing is like the average size of a bank is going to increase if we just don't like have new banks. And so I do encourage like banks that feel like they're too small today to imagine like you're not always going to be this size. If you're successful, you're not going to be this size, right? And so it is kind of there's just a lot of like constraints around scale and that like kind of what makes sense. And we mentioned some fintech partners that work with Bass, and Bass banks are their own kind of animal because these are, you mentioned top 100 banks. None of these banks are going to be in the top 100 by assets, but they will be top 100 banks by number of end user customers. And there's some real complexities there when that also kind of need to be addressed, but not maybe from the like pure size comparison, right?
Yeah, no, definitely. And obviously all the fintech partners that we work through go through fintech type banks,
Yeah,
right?
yeah.
Because you get into the whole Durbin $10 billion asset
Yeah.
size thing, which I think was just. So I'll step on, like, put my tippy toe on the soapbox for a second and say that was
For
like just
sure.
one of the most horrid things to ever go through through legislation in the United States. But that's I think it's a very good point that they're. I mean, by the way, community banks are limited by footprint. You
Hmm.
can only grow so quickly, so fast.
Right.
They are under dramatic threat. They're either getting bought, or again, they're losing customer base
Yeah.
to either they're getting double whammied, right? They get the
Pressure
fintech
from all
and they get
sides, man.
that's right,
Yeah.
and they get the bigger banks.
Yep.
So they get that double whammy, and it's even more important for them. And they have the ability to go out to their customers and say, "Hey, I've got this great new treasury management thing, or I've got this great new virtual account thing. You're managing, maybe you're not managing 150, restaurant locations as a franchise owner, but you're managing, 10, and they could service that level of customer and give them that value." That and then they get the personal service on top of that.
Right. Right.
And that's where the advantage, that the community banks, have is that personal connection that they have with their customers. I bank with one of the top 5 banks. I feel like I'm a hostage to it. Like it's a place where I have my mortgage, I have my credit cards, I have my
Darren,
accounts, I have
come
blah blah blah
on.
blah.
We can't be
I
getting
know.
all our banking products from one bank these days.
But you know what? It's easy. So I do it. And think about it. I'm an analog to what businesses are going through. It's
Yeah,
easier. Go to
it
one
is easier.
place, one
Yeah,
relationship, get your stuff done. But I do feel like I'm held hostage. I don't feel like I get the personal service I need.
totally.
So these are the things. I'm just an analog for small business everywhere.
Yeah,
Right.
yeah. Well, Darren, I have had so much fun talking with you. This has been such a great conversation. And actually, I get to continue this conversation with some of your colleagues at an event, a virtual event later this month. And we're going to be talking about some of the trends in the commercial space that made the CFO such a strategic role at in enterprises, and then what leading banks are doing and the cost of waiting. So I'm excited to pick it up, to keep learning, and to keep hammering home why this needs to be a strategic focus for banks.
Awesome. Yeah, I'm looking forward to seeing the outcome of that one as well.
All right. Well, thanks. Have a great rest of your day.
Yeah, likewise.